morning traders, and welcome to this week's Forex Focus. I hope you've all had a good week in the markets. I know that the dollar's been pulling back somewhat, so the majority of the pairs from a longer term perspective have sort of been moving sideways. But that's nothing to worry about, because from a period of low volatility, there's always a period of high volatility. So when the market decides to re-establish itself, when it starts to take a direction again, we will be there to take advantage of that, and those moves should be coming to us towards the summer months of this year, or well, the next weeks and months, should I say, because we're already in the summer months. But what we're going to talk about this week are some of the shorter term trades that we took this week, and also the trades that could be setting up for next week. So without further ado, let's jump over to the charts and see what it is that we're trading. So we'll start off by looking at the New Zealand yen. We entered this one towards the end of last week. We actually entered this on an order to enter, so we weren't there live at our charts to get into this trade. We put in an order to enter to break below the 90.44 level. We actually entered at 90.40, and as you can see, we were entered at about 3 o'clock in the morning there. The reason that we took this trade, first of all, you can see that the daily is sort of consolidating here. The weekly trend is certainly up, but it does look like it's topping. Now, we're not looking for a long-term opportunity here. We're just looking to exploit the short-term momentum, because what we saw was the market was making higher highs and higher lows quite comfortably. It then came up to this area here, and as you can see, it started to labor around the 17th. It wasn't quite making the higher highs and higher lows that it was before. It started to labor there. The market then broke structure, mini structure here, on the 22nd, and then on the 23rd it smashed through this level over here around the 91.17, and we saw that if you look at the candle, let's just zoom into this chart for a minute here. If you look at the candle that took us through that level, it's a big bodied red candle. So there's obviously something going on there in the markets, and we wanted to be a part of it. Now, we weren't looking to just take the immediate break of that level, although looking back of it with the benefit of hindsight, it looks like it would have paid us quite nicely. We would have been in a lot of profit right now. We wanted to wait for a little bit more confirmation. So we waited for the market to consolidate, which it did here. And after the market consolidation, we then entered on a break of these lows here, placing our stop above the highs. Now, we're looking to take our profit down around these lows here. So we're not looking for the market to do anything spectacular to pay us, but we've got a very nice risk reward trade on the table for us there, over a 2-to-1 if the market makes it down to this level. Obviously, Sod's Law, as you can see, as soon as the market enters our trade for us there, it then spends the whole of Friday going sideways, which is lovely. Not quite what you want to see there, but c'est la vie, that's the way the market goes. The market then closed down, so that's quite promising for us. We'll then see how this plays out come Sunday evening, Monday morning. But that's one of the trades that we're in at the moment. We're still in the Aussie dollar and euro dollar. Nothing much has changed from last week, so I won't dwell on that. I won't waste your time going over those charts. It's exactly the same situation. The market's just going sideways. But because we've got so much conviction behind these trades, we're willing to take the risk and hold them to see what can present itself in the coming weeks and months. All right. The other trade that we're looking at is the EURJPY. Now, the EURJPY may be ready to move just a little bit sooner than the euro dollar. So we're looking to get in on the EURJPY trade. Now that it's broken this, well, we talked about this trade probably last month now. Now it's broken the structure to the downside. We've got a nice little consolidation area in here. And if the market then breaks below this level here and it doesn't break up above, if it breaks back up above into this range here, then we'll need to reconsider our entry. But if the market can hold here and then break below this level here and break below the low at 1.3016, we will certainly be looking to take that to the downside come Monday, Tuesday of next week. But at the moment, it's sort of looking a little bit hairy right now. It looked a lot better earlier yesterday, Friday, but it closed towards the upside. If it then breaks back into this level here, we're going to reconsider this trade. But that's what we're looking at the moment on the EURJPY. Next, we'll take a look at the Euro Yen. Now, the Euro Yen has one of those trades that I love to take. We've taken a few of them over the past few months. It's where we've got a sort of a mini trend going against the longer term trend there, then we're looking to take a breakdown of this particular mini trend. So we've got the 1 hour chart making higher highs and higher lows. You can see it again on the 4 hour charts over here. But if we mosey on across to the daily chart, we can see that the daily chart has definitely got momentum to the downside. So if we had to pick anywhere for the market to go, we would say that it was going to go lower. Doesn't always have to, but that's what we're looking at. Now, with this trade here, similar to the Euro New Zealand one that we took a few weeks ago, Pound New Zealand, we're going to wait for the market to break below this trend line here, pull back, give it a retest of that trend line, and then break structure to the downside, at which point we will be looking to take the Euro Yen short. But we have to wait for this to set up. We've got to wait for the trade to come to us. If we go and try and force it right now, the market might just break higher and higher and higher, and that's really not what we want to see. So at the moment, Euro Yen, we're looking for a breakdown to the downside as well, and that will be the Euro CAD, Euro Yen, and Euro Dollar. So if you're not comfortable being exposed short to the euro on all of those pairs there, I suggest you either dial back your risk on some of the trades so that you can take all of the trades at the same time, or just pick your favorite one from all of those 3 trades that we're currently in, if obviously you want to take that trade, because remember, this is obviously for educational purposes only. This is not investment advice in any way whatsoever. The final trade that we're looking to take this week is the dollar CAD. Now, with the dollar CAD, a lot of you are probably thinking, oh, okay, you're going to take this long. No. We're looking to take the dollar CAD to the downside. We think that, well, we've said this for a while now, that we've seen a lot of topping action on the dollar CAD here. The market has now, we zoom in on the daily chart, the market has now broken structure to the downside. So we've got this complete reversal formation at the top here. The market's then broken down with some momentum. We are now going to look to take this short if the market breaks through this structure here. So if the market breaks through these lows here, we'll be taking this short with our stop above the highs there at 1.2322, entry somewhere around the 1.2082. And as I said, the reason for that, even though if you look at it on the daily, yes, you zoom out, it looks like it's moving up. Look at it on the weekly, definitely an uptrend there. So why would we be looking to sell it? Well, we just feel that there's going to be a reversal in the Canadian dollar's fate. If oil prices start to rebound, that will also give some support to it. But more important than anything, looking at the price action here, it's clearly telling us it wants to go lower. It had ample opportunity to take the market higher. First of all, on the break of this trend line here, it broke up above, failed to get above. That's what we term as a liquidity fade there. So when the market fails to get up above a level and breaks back down below, there's an opportunity, if for you liquidity faders out there that have looked at our other strategy, to sell that top there. The market then gives makes another attempt to break out above the highs, fails at those highs, starts to make lower lows and lower highs. It's now broken beneath this structure here. If the market then breaks beneath this structure here, that's going to be a big indication that the market wants to go lower. I'm not saying it's going to be a complete reversal of the trend there, but if you look at that there, 1.23, even 30, 1.2076, even if we make it down to this level here, all right, which the market can very well do, 1.1618, you've still got a positive risk reward trade on your hands there. And that's exactly what this is all about. That's what trading's about. It's about taking calculated risk. So we know that the market can always go with us or go against us. We know that we're not going to make money on every single trade, but if we take educated guesses, if we take educated trades where we believe that we've got a positive risk reward trade on our hands for us and we've got an edge in the markets, then more often than not, we're going to come out ahead of the game. And even if we don't, if you've got a positive risk reward, you can be right just 50% of the time and still make money, which is a very, very important concept that all of you traders out there should really learn to understand. You don't always have to have a positive risk reward. That's true. I know many traders that trade without it. Some of our day trading strategies, sometimes we take less than a 1-to-1 risk reward. But on the whole, if you can have a positive risk reward, then you're going to allow yourself a lot more extra room, let's say, to be able to make mistakes and still come out ahead of the game. Okay? So that wraps up this week's Forex Focus. I hope you all enjoyed it. You found some value there. It's given you some food for thought, something to go away and take a look at. It's a little bit frustrating that there aren't some of the longer term trends, really taking place right now where we can really get into a position and build on it. But that's not a problem, because as traders, we need to understand that you have to be disciplined sometimes. We don't like it. We would rather be in many trades making a lot of money, but sometimes you just have to sit on the sidelines and wait for the trade to come to you. It's when you go chasing a trade that you will start to lose money. That's when the bad news happens, when you start to wipe out your account because you're not in a trade and you feel like you should be. All right, so please don't make that mistake. Remain disciplined. Wait for the bigger trends to come and take place. They will be there. I promise you of that. There are always big trends. You just have to wait for them to come to you. Okay, so again, thank you very much for watching. I hope you all enjoyed it. Please give a thumbs up, post any comments below the video, and we look forward to speaking to you on future Forex Focuses. So take care now and have a good week's trading.